Ladies and gentlemen, welcome back to another Bitcoin video on the Wolves of Crypto YouTube channel. We've got a lot to discuss today regarding Bitcoin, but also regarding traditional markets and regarding the financial situation, the economy in the United States of America. I tell you right now, guys, the only person who can save the US economy at this point looks like Mr. Beast. Because it's getting really rough, okay? It's getting very, very bad. I would not like to be living in the US right now. Obviously, it's probably going to spill into other countries. It's already spilling into Europe. I know that some banks in Europe are also collapsing at this point in time. Second largest bank in Europe seen a 20% drop in stock valuation in about 2 weeks or something like that. So it is something that's spreading already. But just to overview what it is quickly, and then we'll get into the Bitcoin price action, because I know ultimately you guys are here for Bitcoin TA, but I assure you this is incredibly relevant. What we've seen, I'm not going to get too much into it. I'm going to get into the charts specifically, but the charts in relation to it. Bond yields have tanked, right? We've got a 2-year government bond yield go down from 5.1% to around 3.7% in literally like 4 days, okay? Absolutely insane. I've never seen something this quick. Perhaps during COVID, maybe. Even then, it was probably a little bit slower if you compared the candles right here. Insanity. We've seen this drop very fast. Now, what this means, right, is that the government... Okay, I'll explain what bond yields are. Okay, so bond yields essentially... So a bond is like investing in the government, just very simply put. A bond yield is what they give you in return for your investment. So if a bond yield is higher, it means that the government's giving you more money in return for your investment in bonds. If it's lower, they're giving you less money in return for investment in bonds. Now, if bond yields are higher, it means that it is determined that the risk in the economy is higher, and so higher risk equals higher reward. So if it's higher risk, they give you higher reward. That's why during the period of quantitative tightening, during the period of inflation rising, interest rates going up, all that kind of stuff, ever since 2021, really, you know, when the economic situation got quite bad, they've kind of been raising, and bond yields have kind of been going upwards because they're understanding, okay, the economy's in a worse position. So for people to invest in the government, it's going to be more risky, and so we're going to give them more reward. Now, what's happened recently in the last week or so, during all the stuff that's been going on recently in the last week or so, we've seen bond yields absolutely tank. We've seen them go down, right? 27%. What does this mean? It means that basically the state of financial markets, okay, is deemed to be less risky at this point in time, hence bond yields dropping. So investing in bonds, basically in the economy, is deemed to be less risky than it was before. Now, why is this occurring? It's not occurring because the economy looks stronger, okay? It's occurring because the government right now, and more specifically the Federal Reserve, is planning on pivoting much sooner on interest rates, right? And they're planning on printing quite a large amount of money. Now, if you print money, where does it go? Okay, it goes basically directly into the markets. That's why you saw, if we go to the S&P 500, during the entire period past COVID, you saw basically the biggest bull run in the S&P 500 it's seen in a long time, if not ever. Okay, you saw a huge bull run. Now, as we know, as cryptocurrency investors, it's not because the economy was strong. It's because the money was being printed and injected into the financial markets in almost an artificial fashion, right? During this period of time, housing prices also went up. It's not necessarily the economy got stronger. In fact, fundamentally speaking, the economy got weaker. It's just that all that money, that new fresh money that was printed out was pumped straight into the markets. So the reason why bond yields have dropped, right, is because that's probably going to be happening again to some extent, okay? Quantitative tightening is being slowed down. We're going back into quantitative easing to a certain extent. What we've seen is that the chances of the Federal Reserve actually not raising rates anymore, seeing no more rate hikes, has gone up to 53%, okay? 3 days ago, that was 0%. 3 days ago, we were meant to see another 50 basis points of hikes, okay? 25 this time, 25 next time. Right now, 4 days later, after everything that's happened, it's up to 53%. We're seeing no more rate hikes, and we're probably going to be seeing the first rate decrease in June, okay? I cannot stress how incompetent the Federal Reserve has proved to be over the last 3 years. 17-year-olds on crypto Twitter probably could have managed the economy better than the Federal Reserve has done. It's complete and utter insanity. What this means is that essentially the United States of America, and probably the entire West, because it's probably going to spill into other countries like it always does. I feel bad for the middle class. I feel bad for people who's working for a wage right now because, you look at what's happening here, and every indication does point towards the fact that the Federal Reserve is probably going to have to print a lot of money, just like they did during COVID. What's that lead to? High inflation. High inflation, what does it hurt? Who does it hurt? It hurts the people on the bottom, hurts the people in the middle and on the bottom, right? Rich people don't get hurt by inflation, okay? Rich people put their money in financial markets, okay? And the inflation pumps the markets because the inflation is caused by printing. That pumps the markets. They make more money. So all it does is increases wealth divide. And when you increase wealth divide, what happens? Things like socialism start creeping up, okay? So it's an interesting situation. I said at the start of the video, interesting is an interesting word for it. I said it at the start of the video, and I'll say it again. Mr. Beast, we need you, man. We need you to save the US economy. This is a disaster. But, straight into Bitcoin after that, because there's only so much you can talk about that. I know that a lot of people are talking about that, quite regularly on YouTube now. So you've probably heard about it quite a lot. And no doubt you've heard different opinions. I'm interested to hear your opinion on the matter. But it's interesting for sure. Bitcoin, however, okay, so we can get into the charts. Daily chart on Bitcoin broke to the upside quite strongly above the range. We do know now the top of the range is 25.2K, okay? We breached that range for a brief period of time yesterday. Unfortunately, at this point in time, it was a rejection. I did say in yesterday's video, I said actually precisely in yesterday's video, this uptrending yellow line stemming from October is a likely rejection zone. I put it in the pinned comment, I said it in the middle of the video, and guess what? We did reject from that line as expected. I got a nice short off of that line there on the retest of it. As of right now, Bitcoin's a strong resistance still at 25.2K. It hasn't broken the range yet. That was a fake out. And as of right now, we're also facing the same resistance kind of mirrored on the RSI. So you can see resistance in the price chart at 25.2K is matching up with the resistance on the RSI. And that RSI level is around 60 to 61. So as of right now, still below resistance on Bitcoin. Go to the 4-hourly chart. We can see the same thing demonstrated and the same kind of pattern with the RSI, although the line is in a different position. We can go ahead and redraw the line and we can see that both the daily chart and the 4-hourly chart RSIs are showing strong resistance in that 25.2K region. So there's a bunch of ways I can say the same thing over and over and over again, but essentially 25.2K is not taken yet. And until that zone is taken, we're still in the same range we've been in for 7, 8, 9 months. And so right now, what we really need to be looking at is the weekly perspective in the weekly chart. Ideally, the weekly candle closes in 4 days, by the way. Ideally, what we see, let me bring it up real quick, is a weekly candle close above the 200-week SMA. The 200-week SMA is this green line I've just brought up on the screen. Let me make it a bit brighter so you can see it. If we break above that, which we're getting rejected from right now, which is lining up with 25.2K, we're pretty much in the clear for a move upwards to 28.6K. All right, so that's very important. Weekly candles in 4 days, keep an eye on that. There's not much historical volume between 25.2K and 28.6K, and so hence there's not much historical resistance between the two levels. And so if we do break 25.2K, it's actually very likely, on the weekly chart that is, it's actually very likely that we zoom upwards quite fast to that 28.6K level. I would like to mention quickly that it's quite promising, although everything that's going on is quite negative, it is quite promising to see Bitcoin go upwards during this period of time. What it does prove is it proves the fact that Bitcoin is acting independently from traditional markets. During this period of time, traditional markets have gone downwards, okay? They've gone downwards. They've seen some negative fluctuations in price, and Bitcoin has actually gone upwards strongly. In fact, Bitcoin has seen the strongest 3-day performance it has seen since 2019. The strongest 3-day performance since 2019, guys. That is 4 years ago, okay? So we've seen very strong price action on Bitcoin, proving its independence. If this situation does get worse, if the economy does enter a recession, if everything goes south, we can actually, to a certain extent, rely on Bitcoin to act independently. What this has proven is that people are getting sick of the current monetary system. They're getting sick of the way money works at this point in time, the way money is managed specifically by the Federal Reserve, and they're looking for alternatives, and Bitcoin is one of those alternatives, and that explains why Bitcoin is pumped here. Now, again, I would like to say just one more time, because it's very important, we have not broken resistance yet. We do need to see a daily candle close, preferably a weekly candle close above 25.2K for that to happen. But, it's undeniable what we've seen is promising. Strong bounce off support, strong bounce up to resistance. So far getting rejected. But again, it's undeniable what we're seeing right now is promising on Bitcoin. So that's about it, guys. I just wanted to mention a few things there regarding the state of the economy. Specifically, how major it is that, even in the time making this video, it just went up another 3%. Okay, the chances of seeing no rate hikes went up another 3% in the time I've been recording this video, which is 9 minutes. So it's actually quite likely at this point in time that we don't see any more rate hikes. Major stuff. We'll discuss that more in future videos as we get closer to the Federal Reserve FOMC decision, which is going to be around 7 days and 4 hours from now. But as of right now, guys, I'll leave you there. I want to look at a few things before we end the video. I would appreciate if you stick around for it. So the BitGet exchange is the first one. This is the #1 way you can help out the channel and help out yourself as well as a trader. I've been full-time trading on the BitGet exchange for over a year now, and I can tell you right now it is the best exchange I've ever used in the cryptocurrency market. It's non-KYC, so it adds up with, it aligns with the core fundamental values of cryptocurrency, of course. Also, it's 5 times lower fees than Binance, which is commonly referred to as the cheapest exchange on the cryptocurrency market. So you're getting really cheap fees here, saving money and acting anonymously if you wish to do so. If you sign up using my referral link, you can find in the pinned comment or description below, you can get access to a further 15% trading fee discount for life from using this exchange. So go ahead and do that if you're interested. Also, if you want to learn how to trade, you want to learn how to chart, analyze charts, whatever it may be, use indicators, etc., you can do so on the Become a Trader 10-unit course made by the Crypto Academy and developed by myself and Megawa Crypto. Megawa Crypto is a fellow analyst I work closely with in the cryptocurrency space. We made this course in early 2022. Released it in around May, I believe, and ever since then we've racked up 91 students, all of which are profiting from the information learned in this course. So if you're interested in learning about this course and you want to make an educated decision on it, go ahead and read the bio on the website and chuck us an email if you have any questions. You can find the email address on the website as well. Without further ado, guys, I'll end the video there. Quickly, sorry, one more thing. VIP group, you want to become a VIP member, you want to trade altcoins with me on Telegram, 100 USD for 3 months. We post altcoin trading signals every second day. You can check out the results for that group as well. All that information is in the description below. So without further ado, guys, thank you for watching. I hope you enjoyed the video, and I'll catch you in the next one. Cheers.